Hi everyone, welcome to the Buffett and Beyond Saturday Stock Market Recap, December 13th, 2025. And remember folks, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, we may have already had the Santa rally, and if you blinked, you missed it. But we still have time for another rally if this bottom can hold on the semi and the tech stocks. In our weekly stock analysis video, O'Reilly Auto Parts, we haven't gone over in a while, as a great recession-resistant stocks. And while the S&P was down 19.6% in 2022, O'Reilly was actually up 19% in 2022. Yeah, it's a great stock to help cushion your portfolio during those nasty market corrections. In our ETF video, we look at the results of the top stocks and the top ETFs. In one area, we are quadrupling the S&P 500 year to date. But this week showed this portfolio can be riskier than the S&P 500. But you've got to remember that over any 10-year rolling period, 96% of professional money managers who manage the publicly traded mutual funds cannot outperform the S&P 500. So we're looking at some pretty serious portfolios here, folks. And let's look at the S&P. And when we do, we see that we reached the top in here back a couple of months ago, almost 2 months ago. Then we had that correction in November, and now we came back, but boy, we just cannot reach this top volatility band anymore, or just not yet. And here we've been going sideways for a while, and now we're coming down to test this 20-day moving average. Down here, we don't like what we see about this indicator rolling over. You can see this slanted line down, so if it rolls over, we've got almost a divergence, a bearish divergence in there, because the market tried to make a new top up here, but then when we come back down here again, this indicator didn't nearly reach this past top over here. So Monday or this week, it's going to be a pretty trying week, and we're down about 1% for this week, as we can see up here. And then when we look at the S&P 500 once again, we see another indicator up here. Looks like it's topping out, and I'm recording this about an hour before the close of the market, and it looks like the black line up here is going to cross down over that red line. So we'll just have to see what happens. But being at the top here and having a day like today, or a day like yesterday, I should say, I'm recording this on Friday, so a day like Friday is not very pleasant to see. And again, this indicator, intermediate term indicator, turning down. Let's look at the QQQs, and we're using the volatility bands once again, and we can see we are not reaching another high in here, and we're down testing that 20-day moving average, and that's a line that we really don't want to see cross, because also on a chart that we're not showing, this is right where the 50-day moving average is, and we don't want to go below that 50-day moving average. Otherwise, we come down and test this bottom down here, and that's another couple of percent away, so it's going to be no fun. And we can see here that this indicator is turning down a little bit more than on the S&P 500, and that's because Oracle did not perform well this week, and Broadcom is bothering a lot of people and is down heavy on Friday. And we see up here, I'm recording this just a little bit, about an hour before the market closes on Friday, and this red line is going to exceed the prior day's red line, and the red lines, of course, are when the volume or what the volume is on a down day. So we're seeing heavier volume coming in on this Friday, and the QQQ is down about 1.75%, but we're still at the 20-day moving average, and it's a 50-day moving average, which is not shown here, which we're not too happy about. So we'll have to see what happens Monday, because we're at a critical point in here. So it's going to be a weekend that if you're a market participant, you're thinking about it, but if you're a long-term investor, as we are, then you don't have to think about it very much. But if you want that protection there, we have December, January, and February puts. This is about a $200,000 portfolio. So we have 3 puts, 3 SPY puts. Remember that SPY is about 1/10 that of the S&P 500. So for a $200,000 portfolio, we need about 3 puts for those of you who want to be able to sleep at night. And with the SPY at 681, we have our puts about 100 points, a little bit more than 100 points below where we are now. So we're protected in case we get a nasty correction in here. QQQs, same thing. Again, about a $200,000 portfolio. We have 3 puts, November, December, and January. And this really should be a December, January, and February, just like the SPY up here. So in other words, the QQQs, I just have the wrong chart up here, the wrong dates on this. This should be December, January, and February. And we have that every day in our daily newsletter. So those of you who are following that know that in the daily newsletter, we have the December, January, and February puts. So folks, it's been a tough past couple of days in the market. We had a big decline, then we had a rally that just did not get back to the old highs, and now we're going back down to test again. And it looks like we just might get some more testing coming into this next week, even though we're coming into the Christmas season and it's the holiday season for just about everybody out there. So go out, clear your head, walk on the beach, be with your family, have lunch with them on Sunday, and enjoy yourselves. And most of all, keep your mind off the market, and you stay safe, and we will be back in a few days.